Morning. Kevin Hincks live at the CBOE for our pre-bell playbook. Nvidia lifts all markets. Good morning to you.
Good morning, Nicole. Welcome to the melt up on a Thursday that we got jobs data. Now, full disclosure, we did get September jobs data that was out October 3rd, but these numbers came in way better than expected for a bunch of reasons. Number one, more jobs, 119,000 versus estimates right around 50. Here's the other thing. Unemployment, relatively unchanged, but ticks up to 4.4%. The real number, 7.6 million, very little change from month to month, but it goes over that threshold, gets us to 4.4 million. Here's the good things for the bond market. Wages up 0.2% month over month, 3.8% year over year. That wages data, the bonds are really going to like that wages data because why? Fear of inflation going away, fear of weak labor market with unemployment ticking to 4.4%, more in focus. That has taken the CME Fed Watch tool from 27% up to 36%. So after going straight down, the CME Fed Watch tool for a December rate cut moving back up to the north. So we're going to watch that real close today. In terms of some of the big movers, here's the rest of the numbers on payrolls. Private payrolls up 97,000. I said average hourly earnings, labor force participation rate, 62.4. Here's where the jobs came from. Here's where they didn't come from. Healthcare, 43,000. Food services and drinking places up 37,000. Social assistance up 14,000. Here's where the jobs were lost. Transportation and warehousing down 25,000. And once again, federal government lost 3,000 jobs, now down 97,000 jobs since January, even though if you're on paid leave or furlough or receiving severance, you don't count. But federal government down 3,000 jobs. So this is going to be a big one. We're trying to figure out what percentage of this is the Nvidia's earnings and the hyperscalers that are going to rally today. I'm not sure how much this number really helped the overall market. It's up probably another 1/10% since this number came out, but it certainly didn't hurt it, Nicole.
Yeah, without a doubt. Look, that shows some strength there in the labor force. The labor force participation rate, 62.4%, as you noted. And we had those Fed minutes yesterday. What do you make of it? I mean, is there any interpretation thus far?
Well, so far, I think the fact that the markets are rallying, VIX is going to get destroyed today on the downside. It's now, VIX right now starting the day is down 4 points to 19.64. That's before even options open. So we'll watch that real close today as that was elevated. But I'm also going to watch what the bond market does, what the 10-year yields. They were basically unchanged. Now they're basically down. 10-year yield 4.11%. I'm going to watch, like I said, this market, if they start to build back in a December rate cut they had basically talked themselves out of over the Fed speakers the last couple of weeks, this data should turn that conversation around 180% because you're not worried about inflation, you're worried about the labor market, and that should bring a December rate cut back on the table, Nicole.
Yeah, without a doubt. Thank you so much. It's great to see you. Kevin Hincks there at the CBOE. Up arrows this morning.